All right, looks like we've got the globe pretty well covered. Looks like we have somebody tuning in from Iceland. You know, it's interesting, all the events we've had, there's no telling how many thousand people have been to TradingPub events over the past year and a half, but we've never been able to get somebody to log in from Greenland. So again, that's about as close, this is about as close as we've gotten, I guess, getting somebody in Iceland. But maybe if you're the guy in Iceland, maybe you can call some of your friends in Greenland and ask them to log in. All right, well, good deal. Well, we appreciate you guys being here. This is Morgan with the TradingPub.com. We appreciate everybody taking the time to join us. We're very excited today about Larry Gaines, who's going to be educating us about price cycles and breakouts in the market and how he uses them to swing trade and day trade weekly options. So again, be sure to check out Larry's website, which is powercycletrading.com. Again, powercycletrading.com. He's got a lot of good resources on there, and optionsontheopen.com is his other website. Basically, if you go to it, and let me point something out real quick before we get started, is if you look on the right side of the screen, if you go to powercycletrading.com, on the right side of the screen, he's got a free power trading toolkit that has 15 option strategies, advanced trading tools, and then kind of the difference between a condor and a short straddle, as well as you get Larry's top trade of the week and valuable market updates. So definitely be sure to check that out and register for the free video it's on the far right of the screen at powercycletrading.com. I'm going to play a quick video for you real quick on the Trading Pub, and then I'll turn things over to Larry. All right, good deal. Well, again, we appreciate you guys being here. At this time, Larry, I'm going to turn things over to you. The room is yours. Thanks again for your time today and always being willing to share some of your outstanding education.
Hey, thanks a lot, Morgan. I liked your video, and the music was cool too. So, well, let's get started. Thanks everybody for coming here today. And what I'm going to go through today is kind of progressions for a successful trader and 5 essential tools that you will need that I've come up with that I like to use anyway. So, disclaimer, this webinar is purely educational. Any stocks or futures or anything else mentioned does not constitute advice and should not be construed as a recommendation. It's purely educational. So I appreciate Morgan pointing this out. If you'd like to get my free ebook, go to my website, 15 Trading Strategies for Options. It's a really good little ebook. You can learn about iron condors, butterflies, all that stuff in just one easy place. Put your name, email address in there. I've also got another really nice ebook that you can get in the same place. Just go to the under free ebooks. There's a really good one on futures. So check that out too. It's all free. Going to also be offering a special to everybody that's here today, and I'll go over this at the end of it, but in case you have to drop off, I just wanted you to be aware of it. Here's the URL if you'd like to look at it. And there you go. So anyway, you can get your choice of, I've got 3 power courses that are my main courses that teach my trading system, and one's dedicated pretty much for options, and one's for futures, and one's for swing trading. So you can get your choice of 2 of these. That total value, on the site is $697. I also have a great little course, Option Trading Made Simple, which we use for selecting strike prices. And the daily market after outlook. This is a daily video newsletter that I put out after the markets are closed, just to show you what the markets have done, where they're headed, and any other good information. I do that daily. And then you also will get 1 month to our virtual trading room, which is $147. So all this totals $1790. I'll give it to you today. You guys that are joining me here today, I appreciate it, for $597. So if you'd like to take advantage of that, go to that URL and go from there. So there it is again, powercycletrading.com/pub. So the 5 essential tools for successful trading and 1 secret weapon. So first off, we have what I use as my trading foundation. Second is how to let winning trades come to you. Third is how to capitalize on powerful trend breakouts. And my favorite trading tools, futures, options, and weekly options, and why. And then how to get significantly higher returns using less capital, and a secret trading weapon that we have at Paracycle Trading. I'm going to preview that to you as well. So who are we at Paracycle Trading? Well, I'm Larry Gaines, and I've been trading for a long time, and trading is my passion. And I knew this starting out in the 20s, and it's been my career path that I chose to pursue. So over the past 3 decades, I've been actively trading in financial securities and markets. I'm executive vice president of one of the largest international oil trading companies in the world, and I managed their international oil trading securities group for over 10 years. We traded, and managed billions of dollars worth of oil, foreign exchange, financial market derivatives. So it's a great learning experience, and I definitely paid my dues and learned quite a bit there. And I'm going to pass on a lot of this. Well, I pass on a lot of this to my members, and hopefully I can pass on a little bit of this to you guys today. My trading group we were one of the first to trade over-the-counter options on cargoes of foreign crude oil, and we traded millions of these barrels of crude oil options. So I've been trading options back since the 80s, and I've been trading crude futures since they introduced the first futures contract on crude oil back in the 80s as well. I have a total fascination for all things trading. So, I've studied hundreds of trading systems and models, and, none of them are perfect, and no trader's perfect, but many of them work, and they'll work sometimes. But, my kind of quest has always been to develop a system that worked regardless of the markets, what they were doing, in whatever time frame. And so this is basically what I've done at Paracycle Trading. So in other words, I'm not the guy who just started Trading Shop a few years ago and found a system that works. So I've been doing this a long time, and I've got a lot of firsthand professional experience that I like to pass on that I've learned over the years. So that's what I do with my members, and that's what I'd like to pass on to you guys, a little bit of this today. Now what I've done, I've put together and learned and created a 4-step model that we use that helps us to, pick our trade selections for day trades and also swing trades. And, by this process, I pass this on to my members, so it's something that will help them, grow their trading and become better experts at what they're doing. Thanks too, and so I pass on what I've learned, so you can avoid making the same mistakes that I've made, and that frustration and losing money. So you might ask, why am I doing this? Well, I'm at a point in my life now where I can pretty much choose what I want to do, and my passion is still trading, and I really enjoy teaching others to trade successfully. So that's why I created Paracycle Trading. And the other thing that's important with whatever you do in trading is to have interaction with other traders. And I've got a live trading room that we do this in, and when you're trading, it's a never-ending journey of learning and interaction, and interaction is an essential part of this learning process. So the exchange of information and ideas is a huge part of the progression to becoming a successful trader or even a great trader. And that's why I basically created Power Cycle Trading. When I was running a large trading group, we'd have trading, desk, and we'd have, 10, 15 traders, and we'd have trading groups in other countries and things like that, and we'd have information flow. And, it's a great way to trade and to learn things and to know what was going on. So trying to implement that with, our virtual trading room at Power Cycle Trading. So let's get started on this journey to becoming a successful trader. The 5 essential tools, I'm going to go through those. And first off, though, what we do at Power Cycle Trading, we do a lot of day trading, and we also do some swing trading if we see some really good swing trades set up. Our biggest thing is probably day trading. Most of the members in here like kind of low risk trades. And day trading is a real low risk type of trade to do because you don't have any exposure overnight. So I have a lot of the members that really like that. But swing trading is another really great avenue because it's a style of trading that looks to capture gains in stocks or futures within 1 to 4 days. And a lot of capture those gains in just one day if you catch the right momentum type trade. For swing trading, technical analysis is used to identify stocks or futures with short-term price momentum, looking at price trends and patterns based purely on technicals. Swing trading looks for stocks, ETFs, or futures that have extraordinary potential to break out and move quickly with great momentum in a short time frame. This trading requires that traders be able to act quickly. So therefore, swing trading is ideal for the day trader or traders looking for short duration type trades in order to minimize capital risk. The large institutions can't do this type of trading. It's just their size is too big. So it's really ideal for the individual type trader looking to exploit these little short-term market movements, which can be quite large at times. So I'm going to show you some of these trading examples and things that you can do to define your risk, minimize your risk, and capture some really large trading profits and returns. The first thing I always start out with is my trading foundation, and to me this is very important. And I pretty much start this every day in our virtual trading room. In the morning, we open up at 8 Central, and the room goes until the market closes. But each morning, I'll go through the trading foundation, and I'm going to go through that and show you a little bit what that is. So it's what I call the top-down market technical analysis. When I first started doing this, we really didn't have technical analysis. Pretty much all the trading was fundamentally based for crude oil and a lot of the things that we were trading. So we'd have exchange of information, and we'd look at the fundamental side of things from the top down. And this begins at the top, and it allows a trader or investor to analyze the market from a macro big picture all the way down to the short term or intraday. And by doing this, you can get a feel for developing your trading plan or your investing plan. So this is something you should do if you're an investor, trader, whatever you do. It's an important way to be disciplined and start your trading each day or every week or every month, whatever you're doing. So how is this helpful? Well, it begins again at the top, and the first step is to determine the big picture trend. And I do this by using our cycle model, but you can do this by using whatever methodology or system you use. So once this, you determine your cycle trend, once you have identified that, then as an investor or trader, you can plan on how to allocate your capital. So if the trend is up, you'd probably want to be more aggressive in buying market dips and holding for greater returns. If the trend is down, you'd want to be less invested with a larger cash position. You'd want to be more defensive with any buying, more short-term in your nature of your investing or trading, and have tighter, shorter profit targets and tighter stops. So it helps you to plan your day for day trading or plan your trading in general. So I break it down to 5 different time frames, and I start with the macro trend, which I use a monthly time frame, a long-term market trend, which is the weekly, medium-term trend, which is the daily, the intermediate-term trend, which is hourly, and the short-term trends, we will use minutes and tick time frames to do that. So by breaking down the time frames, you can pretty much develop a systematic way to look at the markets and have an overview of everything, and that's what I call top-down. So I'm going to show you the current trends in the market right now based on our model, but you can use whatever you use for your trading, your methodology to do the same, and just incorporate that over these time frames that I've just pointed out to you, and I'm going to show you here. So here's the macro big picture, and this is based on our system, and this was today. I took this snapshot today, but we've been in a macro uptrend based on our model since January 2012, and so you can see that we've had these big moves. We had this one huge pullback, but it's been a pretty good trend up. So if you have your trend line in here, you can see a pretty dynamic long-term macro trend. And you can see now that we're approaching these prior highs from '09 and back to 2001. So first off, macro trends. So I want to look to the markets and look, for buying opportunities right now. Now the weekly trend is the long-term trend, so shorter term, but we've also been in a trend to the upside on the long-term trend with our system since the start of 2013. So we've had the end of the first week, our system went long, so we've had these weeks all straight up. And right now we're kind of getting into a sideways pattern here, and we'll see what happens towards the end of the week. But right now the long-term trend on our system is up, so that also can help us develop our trading plan. Now the medium-term trend we have, it's been really kind of choppy. You can see how the markets have consolidated sideways, and a few days ago we were short. Today we went neutral, and I hadn't checked to see what happened on the close, but we're probably shifted back to the long side here. So that's on a daily, and I call that the medium term. And these are all on the S&P 500 cash, but I'll do this on anything that I'm trading. So we trade a lot of the NASDAQ futures, we trade a lot of Apple, and whatever you're trading, I will look at this and do this top-down market analysis. And this is the intermediate term trend, and I define this by the 60-minute time frame. And you can see again how sideways and choppy this market environment's been. So when you see things like this, if you're an option trader, you might want to sell volatility, you might want to sell and take advantage of time decay, do some strangles maybe, something like that, or iron condors, things like that when you see this sideways pattern. So you can see our model's just been going chopping sideways here, and that's kind of still where we are. So that's the first thing I will do every day, and if you could do that once a week, that'd be great. I think it'd really help your trading. And then the next thing is how to let winning trades come to you. So as a professional trader, I've spent literally thousands of hours and dollars on trading systems, and I've used and reviewed and developed many different trading systems myself, and I've discovered that there are 5 key elements that had to be in place regardless of the trading system. And I'm going to go over those with you now. First, always have a plan that governs all of your actions, and be disciplined in implementing that plan. Discipline is key to your trading. It'll help you, if you're a disciplined approach each day and you have a decent system, stick with the system and go with it and keep that discipline in your trading. Learn to be patient. Wait for the highest probability trades based on the model that you've chosen. And we like to say let the trade come to you. It's important not to chase trades. It's important not to overtrade. It's important to have some kind of system or trading methodology where you can have it set up where you can let the trades come to you based on your setups and your rules rather than you chasing the trades. Allow the trades to come to you. Don't chase. 5, create structure in your trading with set goals, rules, time frames, work hours, and risk control. So all this, treat it as a business, which it is, not as a hobby, not as something you do once a day or something. Be disciplined about it. So these are all simple guidelines, but sometimes the simplest things are the most difficult to carry out or put into action. So what I recommend is you use a trading model if you have one, or some kind of system or methodology where the rules are clearly defined, and this makes it easier for you to implement them within your trading plan. we use a trading model. We call it the power cycle trading model, and it's a rule-based, and it's based on 4 really powerful indicators. And those indicators that we use identify and define price range, price volatility, change in price cycle, change in price cycle momentum. And this provides us a set of guidelines which allows the trades to come to us. So whatever model you use, know your guidelines and have your rules and use them and follow those rules. So for all swing trades and day trades, we will also use 2 to 4 different time frames for all trade setups. And this is what we call a trade confirming process, which allows for non-emotional trading. This combination has created a trading system that we have that is very high winning percentage, and it makes it ideal for swing trades and day trades, but it is only achieved through the incorporating these 5 elements and sticking with them. So when you do this, when you have these 5 elements and you have discipline in your trading, you make the decisions based on your model that you're using and not on emotions of fear or greed that can often sabotage you as a trader and leading you to overtrade or give back your profits. So I don't know how many of you guys will chase trades, overtrade, whatever. You'll get up during the day and you'll chase a trade and do more trades. And so you lose your discipline and you probably end up giving back a lot of your profits, or maybe all of them are going negative. I know I've always had a problem with overtrading, but when I've implemented these kind of rules and have it very rule-based, it gives me structure, discipline, and I'm more within my trading game. So just for example, based on our rules, these are trades that I've called out. These are just for the first hour 15 of the last 2 mornings. I pretty much trade the first hour and a half, and I'll call out the trades that I see based on our system. And these are the trades that I've done this past Monday and Tuesday, called out to our room. And it'll be a combination of what I trade as the NASDAQ 100 futures and Apple weekly options. So a lot of different futures trades and several really nice Apple trades. But you can see these returns. We've got, this is based on future margin, about $500 per day margin, and one option contract equals 100 shares. So you can see over the past 2 days, I've had a cumulative profit of $285 per contract. That's based on one contract, 56% cumulative return. You can see here Apple 10%, Apple 11%, and then these other NASDAQ trades 5% based on margin. So, all these things add up. Now, our system model, there are a couple of different ways to use it too. So some of these trades could be a lot larger based on your style of trading. But just wanted to throw this out to show you, based on our model and our discipline, that you can have some very consistent returns, and this is kind of stuff that we can do each and every day. So next thing is how to capitalize on breakouts for swing trades and day trades, and I'm going to go through the various the kind of methodology and what we use to do that. So first thing I'm going to give you, this is a really nice little resource. If you don't have it, it's www.sectorspdr.com. And this is a really great sector rotation type of website. And what it allows you to do, if you're looking for different sector rotation and different things that are hot, you can go to this resource here. And what you do is you come over here, it says Sector Tracker, and you'll just click on that. And then it'll bring up this next page where it will into the various different sectors of the S&P 500 index. So you'll have, consumer discretionary all the way down to utilities, materials. And then each day, you can break this down to 1 day, 5 day, a year, 2 years, 10 years, whatever. It'll show you the gains in those particular sectors. So then within that sector, then you can click on a various sector. This was, I think, the technology sector, and then it'll break down all the components of that sector and give you their current change based. This was set on a 5-day type time frame. And it'll give you that, we'll make a watch list of your favorites, and you monitor those daily. And then from that, you can get trading ideas. For example, when I did this particular screenshot, this was back a month or so ago, excuse me, and I noticed that the Nasdaq and everything was moving up, but Google was really stalled and fallen behind, and you know where Google is today. But anyway, so this highlighted Google. Google was down, was trading at 660 now. What is it, 760? But it was down on that particular day, and everything else was up. So I thought, okay, there's got to be something going on. I'm going to look at Google and see what's going on there. There seems to be some major divergence there. And so you put that on your watch list, and I'll come back to this particular trade that we did on that based on just that screen. And the next thing I always do is incorporate trend lines to identify breakouts. And we have this automated into our trading system now, and we use this as a large part of some of the trades that we will do will be based on trend line breakouts. And the thing that you need that's very important about trend lines, and I won't go through it today, but you need to know the correct way to construct them. So supply demand dictate price movement and the use of trend lines. Trend lines are universally used, but the construction of them can be very dissimilar from one person to the next, causing for a very subjective interpretation. And I use a rule-based trend line setup, and this is based on pivot points, pivot lows and pivot highs. And this makes drawing them mechanically and systematic. And I'll show you this on our trading system. I've got a couple examples here to show you kind of the pivot points that we use, and we've had this programmed in and it's automated now for us. So the other thing that we incorporate too within our trading model is moving averages. These are very important to give you, help you identify and measure momentum and define areas of support resistance. So this combination, will help you to confirm trend breakouts, establish continuation of a price trend, and also help you with your risk management and profit take. So we incorporate that to do all three of these functions, and it really helps depending on the type of moving averages that you use, and we've established a couple that we really like. So the secret trading weapon is the other thing that we are able to use at Power Cycle Trading. And this is basically based on our trading model that we've put together. And we've got this is currently set up only for Thinkorswim because we've had this programmed using ThinkScript. And so this particular model, it's based on our components of our model, and then we plug it into a screen, thousands of stocks, ETFs, futures, Forex, anything. So based on the components of this model. And basically what this model is looking for, this particular elements of this model are looking for breakouts. So, this thing will identify on different time frames. We can set it from 1 minute, here's a 5 minute, 15, 30, 60, and 1 day. So we can go from 1 minute through weekly time frames and establish a list or look at things that are potentially, prone to break out to the upside or downside. And then we will also, within this screener, it'll also give you a probability of direction. So this is kind of the three charts that I had set up on that particular screen, but I'll go through a little bit more in depth here. This is what it looks like, the screener itself. This is set to the NASDAQ 100, and then I've got it set to 5:15 daily. And then you can select it by alphabetical, you can select it by 5 minute, 15, and you can see whatever is in a particular consolidation phase where it looks like it might break out. So when the price is starting to come in, narrow in, and then potential breakout. So this gives you this will highlight, and this is in red showing that it's a potential to move to the downside. Here's in green, potential to move to the upside on a 5 minute. So we use this to identify day trades, and we use it for identifying maybe swing trades and even longer term trades on a weekly time frame. And this is just to show you the future side. We can list all the futures, we can list Forex and do the same type of scan. And this is also part of the scan is the actual chart of it. And this is the crude futures. This was taken yesterday. And see here the automated trend lines. Here's a pivot high, pivot lines, always from the right to left, from current price to more historic price. And here's a pivot low to the next pivot low. So we have this programmed in, it's automated, And you can see this pennant formation here and see how crude broke out. So it really helps you to visualize and to identify it. Now you can draw these yourself, but we have this automated for this particular model here. And then this is a pivot high extension that we throw off of it, which creates a lot of times great support resistance to trade off of as well. And these are our price bands, which also show us that there's a potential here for a break to the upside or downside. And these are things that are embedded in the model that, if you join our service, you'll learn about that. This is another example of the weekly. This is a weekly identification. We had this set to weekly, and I went back, and this is in 2010, and you can see this breakout that happened here, and here's a trend line break. So when we see these dots appear, this shows you the first time that there's the potential for the market to move sideways, and then it's signaling that it might break either up or down. And these are color-coded to give you an indication. So here was a break to the downside, and this identified that there was a potential for a break setting up. And here's another break to the upside. This was back in this was also back in 2010. So this is on a weekly, long term. I just wanted to give you an example of it. Here's a daily, so you can see the breakout here. So this identified that the market's in a sideways pattern. It's potential for a breakout either up or down. In this particular case, it broke to the upside, and this is based on a daily time frame. This was back in December. So I just wanted to show an example of that. And here's another shot of the, this is a 1 hour, 60 minutes. See how here it consolidated in and then had this break to the downside, and then it popped back up, another break to the downside, and we'll have trend lines drawn in. The trend lines disappear after X number of bars. We have it programmed in, but it's a really great tool. Here's a 15-minute time frame. You can see another here where it's coming in and identifying this potential based on our model for a break to the upside or downside. Had a trend line in there, broke to the downside. And these are all examples on crude. But you can do this on anything you're trading. We use it a lot for everything we do, and a lot of our guys trade gold in the room. Here it is for a 5-minute time frame. You can see here we're identify the potential for a breakdown. Real hard. Here's another break potential, and actually this is crude, and today this was the 5-minute. Today crude broke to the upside, so identified that. This is showing you gold. This was earlier on that first screen. One of the members, he made over $2,500 contract, and this was last Friday. And these are some of the signals based on our system model. Here's one of the long. You can see that huge move to the upside. Here's another short. So these are just a few trades that this model generated. Now these are, we don't have it totally automated where it does the trading for you, but once you learn the system and you get the course, it'll teach you this whole model. And then if you have Think or Swim, you can actually buy this component, and makes it a lot more visual. But this is just one part of it. There's more to it than just this. And so then I'm going to go through what are my favorite trading tools. Well, we like to trade futures, options, and weekly options, and we do that incorporating our trading system. So a lot of you I saw traded futures, so you're going to already know these benefits. But the main benefits I just kind of wanted to highlight is you get a significant tax benefits, the 60-40 rule. This is a whole course in itself on the benefits of using futures. Lower margin costs, low commission, very liquid, great volume, transparency, 24 hours trading, great for hedging, great for diversification of your portfolio, and lower risk than stocks because you don't have that overnight gap risk. Now the thing that I like, and probably everybody here in this room likes if you trade futures, are the margin requirements. So if you're day trading, for example, we like to day trade NASDAQ 100 futures, you only have $500 daily margin. So that makes you pretty good returns. You don't consistently make 5% return on these trades or more. So that's the great benefits there to futures. Now, weekly options are sometimes even better than futures, and so I'm going to go through some of those benefits here. But weekly options now account for nearly 12% of 300+ million option contracts traded every month. Uh, they're still relatively new, but don't overlook them for they can offer some huge trading benefits if you know how to use them. And so for some more exciting stocks, they're really high priced like Apple and Google. It's a way for you to participate, in these particular contracts or stocks without having to put up as much capital. And they currently make up, over 40% of the option volume. Now the weeklies come out, every Thursday, a new contract, and then the following Friday, 8 days later. And just recently in November, they added additional weekly option contracts. So now you get 5 straight weeks of weeklies on certain stocks and ETFs. So it's a great vehicle for trading, covered calls, for trading options outright or spreads, and you can really, reduce your risk and lower your costs if you know how to use options. So here's just an example to show you. For Apple, you've got 5 consecutive weeks. So each week, so you've got to, so every week you've got it broken down for a weekly option. So you don't have to go 30 days out or 60 days out. You can go each week out if you want. So what are their main benefits? Well, number one, they can be very cheap since the expiration is within days, weeks, or even hours. You can purchase, the at-the-money weeklies for as little as $5 to $10 a contract. They have unlimited profit potential. They can move 500, 800, 1,000% or more on a regular basis compared to a regular option or even a futures. They're easily traded. They're just, like any other security. Price goes up and down, and we trade them based on the underlying using our model. And they bring in a lot more low-risk income because weeklies give you 52 times a year to profit from low-risk, non-directional, or directional, which is a lot more than if you just trade the regular monthly options. So, they are for everyone, not just the pros. But, over the years, they've managed to get kind of a bad rep because people don't understand options. But options, if you keep it simple, they're not difficult to use. And, we use I've developed what I call the practical way of trading options to teach option trading. And this is focused on the option delta and market timing. And market timing is, in my opinion, the single most important factor in assessing a stock or futures contract likely price movement. There are a lot of different option strategies that take advantage of volatility, but still, if you have directional idea of the markets and what you're doing, it's a lot better way to go when you have a direction. So for swing trading or day trading, market timing is a key element to the success. But most individuals just don't have what they need to get this information quickly. So by using a system which we have in weekly options or futures, we've really put together a great combination for trading, day trading and swing trading. And so now I'm going to go over some ways to get some really great returns, and most of these will incorporate the use of weekly options. So when swing trading or day trading, I like to use options or weekly options if I see a good, kind of setup because they offer exceptional trading benefits. And one of the big benefits is leverage at an extreme low cost. So to understand this, the leverage, how it works, you need to understand what makes up an option. What is the value of an option, the pricing of an option? So basically, it's just boiled down to time value times implied volatility times the extrinsic value of the option. And by using weeklies for day trading or swing trading, we've been able to better utilize our benefits, and that takes advantage of the time decay, volatility in the option, and option delta. And this has really created a really forceful kind of triple win trading formula for you to use. And then by combining these elements, and if you have a good trading methodology, you can make some fantastic returns and great profits on your capital. Now, the first thing to understand about any option is the time decay, and especially on a weekly option. So here's a chart just to kind of show this graphically. Weeklies come out every Thursday, a new contract, and then again, they will expire a week or 8 days later. So here's when it comes out and it's priced the first day of Thursday, 100% time is in that option, and then you can see how it just tails off exponentially, just very fast until it goes to zero. So it'll eventually goes to zero since it's an option, and so you need to know how to incorporate that in your trading. So here's another graphic or table example to show you numerically what this looks like. And I just took the time value, implied volatility, intrinsic value to get your premium, and I just plugged in a 1 for Thursday, which is 100% value, time value, and I just threw in a 300% implied volatility and just kept this as a 1 as a constant. And so you multiply these three factors, you come up with a premium of $300. Decreases the next day, goes down by an eighth. It's about 12, 13%. And if you take the exact same constants in here, you can see that the premium goes down to 262. On Saturday, it decreased by another eighth, so it goes down to 0.75. You can see how it trails down. Now, even when you have a spike in implied volatility, like here on Monday, you had only half of that time value left in your implied volatility. I kicked it up to 800%, kept the intrinsic value at 1, and you can see you didn't make much gain on your premium. So by understanding this, you can use this to your advantage and use it along with your trading directionally or whatever to take advantage of the time decay on these weekly options. Now here's another really good example. I'll just show you this real quick, and then I'll get into some options, spreads, and things that we've done here recently. So here's another example of the delta. Here's Apple at this time was trading at 630. So if you take the at the money was about a 58.60 delta right here in this column, and then you look over here, that's a 640 strike. So you can see here, this is a weekly option. The bid 500 because one contract equals 100 shares. So that's 500 at 505. So you could buy the 640 strike at $500. Now, if you look at this option chain below, it's the same strike, the 640. You can see it's 1050, which is 1,050. So it's double, and that's because the additional time value that's priced into the option if you take the monthly versus the weekly, which is here. And here's another chart to show that. And real quick, I'm not going to spend too much time on this, but here's the shares of Apple. If you were trading at 640 and you bought 100 shares, that's $64,000. One contract. If it moved $1, that's $100. That's 0.16% return on your capital. Now, if you bought the weekly option with that 50 delta that I showed you, it was going for $500, and it moved up $1 or $100. You make 20%. You take the same thing. Here's the monthly down here, and you say same strike to 640. Same delta, 50. You can see your dollar move, and that's 9%. So you can see how your return significantly improves because the cost of your option is much lower because of the time value that's in there. Now here's an example of leverage at a low-cost trade. This is a directional trade. This was a trade I did last Friday on the expiration Friday, and this will show you how it works. Now this is our trading system had given me a short right here at about 8:48, 8:49, right the first 30 minutes of the day. And you can see here's a trend line break. Here's your pivot low, trend line. It broke here and price moves down pretty hard. So it moved here, it broke at around 454.50 on Apple, moved down to low about 452.25 from that break. So you could have sold the shares short and made a pretty good return, 200, 250 bucks, per 100 shares, or you could have done options. So on this particular one, I did the 460 puts. Those were expiring that day, so they were very cheap. This was like a 68 delta. So every $1 move in the underlying, this would move up 68 cents. So instead of shorting the shares, I bought these at the exact same time with the underlying going down. I paid $605 a contract for these puts, and I sold them off within a minute or two at $740. Now these eventually pulled back, and if I'd held those, they went up to 11. So you can see the potential profit and the return on your capital. So on this fast trade, I made $135 per contract. and that's a 22% return on my capital of $605, and that took me all of 2 minutes. So these things, I mean, if you'd gotten this trade, say if you'd stayed in this trade up to $1,100 right there, for example, you would have made, I'm just kind of roughly calculating this, you would have made, that's an 80% return. So that's how, you hear people talk about these returns and you think they're not real, but this shows you how they are real. Now here's another trade too on Apple. Here's a volatility squeeze trade where everything narrowed in and then blew out. And this was back in January. This was a trade set up. Now at that particular time, we also like to look at the open interest to give us an idea where the stock may go. This is very helpful. Even if you don't trade options, this is something for you to look at. And so at this particular time, Apple, the 525 strikes had huge open interest at 11,000, and then you can see over here on the put side, the put open interest is less, so it's what we call skew to the upside. So potential, for maybe Apple to break to the upside. So using our system, here's a 15-minute time frame. Our system gave us a buy signal here. This was on the 11th of January. And trend line break, boom. So 521 up to 523.60, a nice pop there. And here's a look at it from the 5-minute time frame. Another, we had a buy signal there, break the trend line. Here's a look at the 400 tick. We use various tick intervals. Another signal there, just to show you how it lined up on our system with these trend lines. So incorporating our model, trend lines, moving averages, which I don't have in here. You can get some great trade setups, and instead of using the underline, use the options. So on this particular one, this was the January 11th expiration, the 515 calls. This is a 1-minute chart, and this was, you could have bought these at $635 contract, and they went within a couple of minutes up to $850 contract. So, that's over a $200 return in a few minutes. That's a 34% return on your capital. Here's the same trade. If you'd used the $520 call, which is further out of the money, you could have picked those up for $210 a contract. They exploded up to $380 here in a few minutes. That would have given you $170 a contract on your capital cost of $210. That's the max you could lose. That's a return of 81% or over 80%. Here's another example. Here's going even further out. Here's the 525 calls. They were going for as little as $40 a contract. They blew to $90. I remember I had these calls, and they blew to $90, so that's a $50 profit there. That's over $125, 125% return. So you make 50, your cost is 40. That's over 100%. And your risk is $40 is the max you could lose. So, and another way to do it is sell puts. So that's another example too. That was selling the 525 puts instead of buying the calls, and you can see it collapsed. And you could have collected $420 in premium, covered back at $245, had a great trade. So that was doing a credit, collecting credit. Yeah, you can do credit spreads as well. So that was an example of a credit selling the put rather than buying the call. So that's a really great example. Now I'm going to show you one more. This was Google, and this is a really great Google swing trade. And I'm going to flash through this because I'm kind of running out of time. But I want to show you this Google, and this is how we do our kind of our analysis. So based on our system, and if we see something setting up for a swing trade, I'll do what I call breakout target analysis. And this particular analysis was on that Google that I showed you back on that slide, that spider slide, that sector where Google is undervalued. So at the time, Google was trading at $660. And so, you look back and you look at the average moves of whatever you're looking at and the target over a 1 to 4 day period. And Google typically will run anywhere from 2 to 4%, pretty easy. So then you just look for what is a 2% move on Google. That would be 675, 3%, 680, 4%, 690. And this gives you your target zones, and then you can structure an option trade based on your target. So here's the next step. Once you have a target zone, okay, what do I want to buy? Okay, you could buy, here's Google, it's trading at 670. Our system gave a long. I'm just going through the progressions. These are progressions of a trade. Here's a 60-minute time frame, gave us a long. So these things are all setting up. Here's the trend line break. So it looks good. You know, we analyze it, look good. Yeah, let's do this. This looks good for swing trade. And then what do you want to do? What kind of swing trade do you want to do? Here are all the 3 time frames. Here's a daily. Here's the 60. Here's the 5-minute. Everything's set up. So that's analyzing the trade and then structure the trade. So one thing you could do is just buy the 690 calls outright. And this is a 30-minute chart to show you that. So you could have paid $440 for those. Boom, they sold up to $1,400 in 2 days. That's one way you could have done it. Just bought the calls outright. And if you'd done that, this would have made you bottom line return on capital of 218%, risk to reward 4.36, because I usually will. That was the cost, 220. I mean, the cost was 440 on that. If it goes 50% against me, I'll usually stop out. So my risk was 220. So that's a 4.3 risk to reward. Now here's the Google option spread. This was a really nice spread trade setup that we did. And same thing. So instead of just buying outright calls to reduce your risk and finance, bought the, here I'll show you the spread right here, bought the 675 calls right here. They were going for about 840, I think that's $840. And to reduce that cost, sold the 690 calls against them simultaneously, so collected 440. So I had a $15 spread, and my cost was, here's just going over the analysis, cost was $440. So the target of 4% move, we were targeting $690. So I bought to open the DC22 expiration 675 calls, $840. Same time as the spread, sold the 690 calls and at 440. So that put into a $400 max you could lose. Defined your risk. Stop loss of 50%, $200. That's your risk that I would put up. The position closed out on the 29th, 3 days later. Sold to close the 675 call, $2,370 contract. Had to buy back the short leg, 690. That cost $1,450, a loss of $1,010. So your net profit was $520 a contract. Return on your capital, 130. Your risk to reward was almost three to 1. So those are the things that we incorporate, you know, to do our trades. You can either trade outright futures, options, whatever. And, you know, based on that, you know, Will's a great trader. He's one of our traders. He's a fantastic gold trader. Friday, he made 2,300 contracts. Today, Downhill, one of our really good traders, he made $840 a contract on one trade. That was on gold. I mean, this doesn't happen all the time, but these guys are in there every day using our model. And that's it. If you would like to learn more about how we do it and have any questions, please let me know. And if you'd like to take advantage of our special offer, please do that as well. So you can get your choice of any of these 3 courses. You can get 2 of them. If you're a day trader, trading futures, you can buy that course. And then if you want the swing trading course, get that with it. And you can get both of those. You get the option trading made simple, the aftermarket outlook that I do every day, and 1 month in our virtual trading room, everything for $597. So please take advantage of it, and you just go to powercycletrading.com/pub, and it's all there. Any questions for you guys? Make sure I can see here. On the weeklies, like today I did a weekly call spread that expires Friday on Apple. Apple, you know, looks like it's trying to get back into that gap area. So I bought a 465, 470 call spread, paid $85 a contract. So, you know, that's a way to trade that, or you could have just bought the options outright. But the problem with buying outright, then you've got the theta. Overnight you're going to lose $30-$40 a contract, or because of the time decay. So I like to do spreads to limit that, because you're long one and short another, so it kind of offsets somewhat. So most of the strategies that we do, we keep it very simple. We'll do directional type strategies. Sometimes on an earnings play, we might do, sell strangles or iron condor or something like that. But the trading room, if you do my special offer after the 1 month is over, it's $147 per month. We'll use a combination of exponential and simple moving average, because exponential moves faster, so we like the exponential crossing a simple, that's for kind of some momentum. And so we have a combination there that we use for all of our setups. Now the trend lines, I use the underline. So whatever we're trading, we use the underline. And then instead of trading the underline, if it looks good, we'll trade the option. Now sometimes the option spreads may be too wide, so that's why we trade a lot of Apple. It's because that spread's pretty tight. When I say tight for an option spread, if you can get $10 to $15 on the spread, that's a very nice spread. So that's between the bid and offer. Sometimes they'll widen that out, when the volatility spikes. So it could be 20, 30, and if there's not good volume on some of these contracts, it can be a lot wider than that. So that's one thing that we trade. If we're trading weeklies on day trading, we'll trade usually a lot of Apple. And we've really gotten into trading the futures. A lot of our traders have, switched over to futures using our trading model because, the spread is so tight on futures, and you can really get your stops tight with the OCO orders. So there's great synergies there with futures with our model. And then I'll go back and forth. If I see a great potential setup with the Apple weeklies, I'll do that. If not, I'll just use NASDAQ futures. So you could see from my trades I showed you earlier, I think those were about 13 trades over the last 2 days, and those are all just in the morning. And probably 3 to 4 out of those were NASDAQ futures, and 1 or 2, 3 or I think 3 or 4 of those were Apple weeklies. You can use my model on any platform. So I have TradeStation, NinjaTrader. They're all great platforms. Now we've got the customized package that we put together. We've got that only on Thinkorswim because my partner on that, he's a brilliant programmer. He's done it with ThinkScript, and we're hoping to do that on other platforms. But right now it's only available on Thinkorswim. But Thinkorswim you can get pretty much free when you open your account. And yeah, we have some of our members trade ES, primarily E-minis, mostly NASDAQ, gold, ES, YM, some crude, but every day in and out NASDAQ 100, and some like to trade the ES. I prefer NASDAQ 100 because it really moves well. It's not quite as choppy. The ES can be kind of sit, and then makes these spurts, but the NASDAQ really trades well. Plus, we like to trade off of Apple as well. So what we'll do is we'll look at all three together for any of our signals usually. So if we're going to go long NASDAQ, we want the setup to be long on ES and Apple. So we have those three going together. So it just gives us more wind to our back as far as the trend. Yeah, the studies are all included in the membership. You get the course. Here's what you get. These courses are extensive. For example, the Power Cycle Futures day trading course, you can have your choice of that, or the futures course. The day trading course, 137 pages, 13 videos. The Power Cycle Trading course, which is for swing trading, is 128 pages here. And then the futures trading course I mentioned, that was 137. These all have videos to go through all the indicators, how they work, setups, example by example. So this futures course has 13 videos, 5 hours of instruction, 20 videos. The swing trading course, 17 videos, and then option trading made simple. That's comes with three 3 videos there. So they're all extensive courses, and you can have your choice of 2 of these 3. So if you're trading day trading, futures, I get the futures course. If you're day trading stocks, get the day trading course for stocks, and then get the swing trading course right here. It's an excellent course. I just did a boot camp about a month ago, and that's also available. But the boot camp on swing trading, was primarily a course for swing trading, which I put together for my trading methodology for swing trading, and incorporates our trading model, which you will get in this course. You'll learn all the indicators and how that model works. And then if you have Thinkorswim, or if you want to get Thinkorswim, then you can get the automated package on top of that, which is really super. I would probably recommend futures. Futures, if you're starting out, is a great way to start because the margins are low and it's a very liquid way to get into it, and then learn the option side of it. So with our system, you can trade anything, and yes, you can use Option Express. Some people do. I'd say most of the people will use for options Thinkorswim or TradeStation, and then we have a lot of futures traders that will use NinjaTrader and TradeStation. But so those are some of the some of them that are used. Now, when I'm in the room showing my model, I'm showing the Thinkorswim platform because I have all the indicators automated on it, so you can see those and all the. We have a lot of different bells and whistles. We have Fibonacci lines in there, extensions that we've developed that automatically are programmed in. We have trend lines in there. It's a really great package. So when you do join, if you do, I hope all you do, you'll come in the trading room. You'll see me using the Thinkorswim platform, and then if you're interested in that, you can get that as an add-on, and we will get that installed to you. So that's pretty much it. But any other questions, I'd be happy to take them, or send me an email. I'd be happy to answer that too. Yeah, if you don't have time to day trade, then that's a great thing for swing trading. So I would recommend that you get the swing trading course, and then study that course. Come in the trading room if you can, ask questions. But I think that course will pretty much get you head in the right direction and give you a methodology to use. And then if you're really get into it, try to get our scanner, which I'm going to be releasing here in the next day or two that I showed you. And you can scan for over thousands of stocks, ETFs, futures, and look for different setups. So it's a great tool, and that'll be coming out in the next day or two. So if you do join, keep your eyes open for that, and definitely sign up for my ebooks, and so you can get on my list. So when my scanner does come out or anything else, you can see that. Now I'm also going to be speaking at the Money Show in New York. It's February 17th through the 19th. So if you're up in New York at the Money Show, please come by and hear me speak. I'll be speaking on the 19th at 8 o'clock. So I'd love to meet you. If you please come join me there as well. The toss, if you buy our package, any updates we give, we'll give you. It's grandfathered in. As long as you're a member, you'll get those. Yeah, it's uploaded. It will give you. You have to import the toss indicators into your Thinkorswim platform. The scanner, well, sign up at my site so you get you'll get my notification, but it should be coming out in the next day or two. I'm just putting together the video on how to actually install it into your Thinkorswim platform. So that'll be coming out soon. It's a pretty cool tool. But the model right now, that's part of the model, but it's got a lot more than what you just saw in the model. But you can use it for day trading, swing trading, or whatever. So it's a really great visual model. It also has audio alerts too that you can have put in for various things that rules when they set up. It'll give you an automated audio alert. So it's a lot of really great features that you can turn on and off. So stuff that you don't want, you can turn it off. Stuff you do want, you can turn it on. So thank you very much for having me here today, Morgan. And you guys want to take advantage of this, go check it out, powercycletrading.com/pub. And look forward to working with you guys in the future. Thank you very much.
All right, great. Thank you, Larry. We really appreciate you being here. And again, excellent job as usual. We'll get a copy of the recording going and post it on our YouTube channel, email it out to everybody, and post it on our website. We'll send it out via Facebook and Twitter as well. So we appreciate you being here. And again, great job. We are very thankful to all of you guys who attended the presentation as well. Thanks, everyone. Have a good night.